Hi there, traders. This is Brad Gilbert with today's trading action. All right, a quick update. Just got some power back on. Euro hits 4-month peak, dollar soggy on German spending and tariff reprieve, right? So the Don has come out and exempted a few Canadian and Mexican car companies, like an extra month. He's just sort of pushing these things back as long as they comply with the existing free trade agreements, right? So whether that's something that's going to be continuing or not, I'm not sure. But what we're seeing in the market is the dollar sliding, right? Seeing big moves, and this is because the dollar has had such a good run for some time. A lot of these currencies, Aussie, Kiwi, well, dollar CAD's still sort of on its knees, bit of dollar weakness there. Dollar yen doesn't know what it's doing, and you know what? Dollar Swiss a little bit confused there as well. But look at the long-term trends, right? Because this is where the action is. We're starting to see the dollar breaking down technically, and it doesn't look good. I mean, dollar CADs are sort of sitting there, but we're starting to see euro, sterling break some big levels here. Aussie and Kiwi technically looking to break above these trend lines and then head towards those bull bear pivot lines. So to me, right now we've got sort of trending markets, right? If I just have a look at the global markets dashboard, the US yields have just recovered a little bit. Okay, we had a good day yesterday on the equity markets, providing a risk on profile, right? So pushing back these tariffs, good for global growth. Equities go up, the dollar comes off, and euro, sterling, Aussie, Kiwi rally, right? That's the way of it. But we are still seeing buying of the Swiss and the yen. Now, right now, okay, at this point in time in the week, you want to be sort of working with that trend, okay? Dollar weakness. So if you are looking through the numbers, have a look around ECB refinancing rate, ECB deposit rate. Okay, this is going to be an interesting one. 0.25 it has been like is what the market is expecting, right? A cut out of the ECB. Now, if I just come up, let me see if I can get this up on my screen here. The main part is the interest rates from the central banks, obviously key, but they are factored into the market. Let me just get the interest rate probabilities up. So don't like get overly excited. The surprise would be if the ECB didn't do anything, right? So a cut 0.25, 97.2%. I've probably never seen a rate cut that highly factored in not happen, right? A 0.5% cut, you've got like a 3% chance, but they don't know what the implications are of Trump's tariffs. You got the new German government, there's going to be reform, there's spending, there's a whole range of things, right? So it's too early to go by zero point 0.5, but we will get that 0.25 cut, okay? And that's stimulus, right? That's stimulus for the European market. We've got the weekly jobless claims numbers there as well after this, and you got some Eurozone retail sales. But the central bank will be key. The ECB will be key today about what they're talking about with regards what they're going to do next. Okay, and that's the important thing. If there's a small portion of the market thinking they need to cut by zero point 0.5, well, then you've got to think a 0.2, another cut next meeting will be on the cards, right? And does that mean a weaker euro? Well, not at the moment, right? We are seeing a few like odd sort of imbalances with fundamentals. Don't forget, the euro has been suppressed largely because of that interest rate was factored in. Obviously, strong dollar as well, and geopolitical events. Now, we have seen the German election. There was confusion about what was going to happen. We're getting spending. We're getting like think of the interest rate cut by the ECB as stimulus, and that's going to really drive euro to the top side. So but don't forget that has been factored in so far. So everything at the moment is factored in. After this ECB meeting, the data becomes live and active again because it leads towards the next meeting, right? That's why this meeting is important. But you know what? Look at something like the Aussie here, right? It's burning through these resistance levels. Bull bear pivot lines turning up. This thing is Aussie and Kiwi have got at least 5 cents in them. I'm getting excited, even though I'm about to go into lockdown with this tropical cyclone right on us. But I tell you what, technically, you know what? If we see the euro take off, well, then I got to say Aussie and Kiwi are primed to go up here, right? That'd be my major focus. And if euro goes, I'll be looking at getting into a down move on dollar Swiss there as well. Okay, so lots happening. It's just a shame that I've sort of been offline, losing power, everything else. I mean, what's the chances? Anyway, guys, have a good one. The trend's your friend. That's all you got to think of. So don't like go crazy. Think of what the ECB are going to do. What are they going to tell us next? The Don's done another backflip here on some of these tariffs. That's hard to sort of factor into the market. But you know what? Let's focus on the trending markets. That's where the cash is. If you've got Prime Time Pro, start to look to get in on dips here. Okay. Any moves back down, we're looking to get long euro, sterling, Aussie, and Kiwi. Definitely. Right. And then obviously the dollar pairs we're looking to sell. All right, guys, that's it for me. Have a good one. I may not speak to you for another until Monday. Hopefully, the office and everything else here is intact by then. All right, guys, have a good one. All the best. Cheerio.